Rates are rallying overnight as if there is no tomorrow. After our timely alerts earlier this week, the bond market is now accelerating, with 10 and 20-year yields and other key yields surging in what could become a full-scale breakout. The setup is unfolding quickly, and TLT is feeling the pressure as the momentum flips sharply bearish. In today's bond market analysis, we'll dissect the latest moves, study the candle structures, and deep dive into the Elliott wave formations across the curve. Is this the start of a powerful new leg higher in yields? Are bonds entering the next stage of a prolonged downtrend? We'll break it all down together, with detailed micro and macro insights on 10 and 20-year yields, also TLT, and outline the most probable path as this critical moment unfolds. Stay with us. It's time to chart the waves while the bond market rewrites the playbook. This is the chart of the biggest concern. So these are 2, 5, 10, 20, and 30-year yields. And what we are seeing right now, after a confirming candle today of a bottom, the next candle is shooting higher, and for 5-year, for example, it is climbing above the 200 days moving average. For 10, 20, and 30 years, it's now solid above 8 days EMA. So the 2-year yield is a little behind, but we'll see. So it looks like it's catching up. So what does it mean? If we look at the smaller frames, for example, this is a 4-hour frame for 10-year yield. And what we are seeing here is that the 4-hour frame is already strong bullish, and it flipped 8 by 20 EMA cross. It moved about 50 periods moving average, and it is moving higher. So if we look at the 12-hour frame, it's also strongly curling upward. And the most important thing that the technicals support this move, and it looks like this by certain indicators, this could be already wave 3. If we look at the daily frame, we just discussed it, everything is looking bullish. And the 2-day frame, which is closing tomorrow, a close above this line, which is 4.313. Let me put it here. Now it's 4.313. So it's 3.13%. If the rate US 10-year yield climbs above this and closes tomorrow above this level, it will be a reversal on the 2-day frame on a bullish Harami cross. Well, that would be impressive. Now let's move on to the Elliott wave chart that we shared today earlier a couple of times in 2 videos. So what we are seeing here is that potentially, as I mentioned before, this wave has lots of qualities of wave 3, and so far we put the blue count on a back burner. So this is a possibility, but a very distant one. So now we are looking mostly into the red ones, and I'm removing just a few unnecessary elements here. So if this is wave 2 and the wave 3 is unfolding, then we can consider something like this. So this is wave 1, 2, potentially wave 3, 4, and 5 somewhere here. So this is the perspective. Right now, looks like the yield is in wave 303, which is a very strong one. So once we have this, it would be wave 4 somewhere here, and after that we would have wave 5. That would be the perspective for this first wave. And let's try to put some preliminary channel here. So I would expect something like this, for example. And this would be for wave 2, and 4. So let's see how it unfolds overnight, and the next important closure will be the 12-hour overnight. And when it's gonna happen, let me check. So 12-hour frame will be closing in 8 hours 18 minutes. So if you're watching it, well, so the important thing that the candle should be green, and it ideally it should close above this green line, which is 20 days EMA. In this case, I would expect it to be bullish, and the rally would continue. Well, that's the perspective. And now let's ask a question. So if this is so bullish for yields, so what would happen to TLT? TLT is technically bearish, and today it made, this is potentially an impulse for wave C of A. And let's remove this for now. And today this move made an overlap with this wave, technically invalidating the big structure. So I would wait for the move below this level just to make sure that everything is becoming bearish. So far, it's still a chance, but very little. Let's see how it moves, how it opens tomorrow. If yields continue to fly, then this is probably gonna be an opening somewhere here with a gap. All right, so that's the perspective for tomorrow. And if we just double check on the candles, we have a very strong bearish closure today after a bearish harami, big one. The red candle closed below yesterday's low, and now the path downward is open. The same thing happened on a 2-day frame, a big and strong inside down candle, potentially opening a path downward. So somewhat similar to what happened here on at the beginning of December, a very similar setup. And the 3-day frame, which also closed, it's also a strong bearish candle. Now we have the big momentum, bearish momentum for TLT. And before we wrap this up, I'd like to show this one piece. So this is the 10-year yield chart, an annual chart, annual candles. What we were tracking here for last several months is a 100-year moving average. Last 3 years, this line was touched, and the candles were rejected from this line. So this year it went through, but again it was rejected, and the cross happened on January 10th. Now, if we see a reversal, if we see a rally, well, there is a chance that the candle turns green and climbs above the 100-year moving average, which was last time crossed somewhere between 1950 and 1960. We don't have a clear enough data to show this big reversal, so this big support line. Well, the bond market is moving fast, with yields accelerating and bearish pressure mounting across TLT and the broader curve. Whether this rally in rates triggers deeper breakdowns or meets short-term resistance, we are tracking every key candle and wave as they develop. Don't miss a move. Join us inside our daily market waves reports for real-time bond coverage, precision Elliott wave analysis, and premium insights at investingangles.com. Stay connected on YouTube, Twitter, Telegram, and Reddit for immediate updates and expert technical breakdowns as the next pivotal moves unfold. Thanks for watching, and as usual, happy trading.